Hola mis amigos, buenos días, buenas tardes y buenas noches a todos. Good to see you all again. I know it's been a while, but I've been busy with full-time work and you know how it gets. After doing a shift, I haven't had the energy to be doing the videos, but I'm back, so gonna get back at it. Nice little present from the missus. So, yeah. Anyway, we've got a few things to discuss today. Gonna show you some quick and easy, lazy ways to find good stocks. So pay attention for that. But as usual, I'm glad you're here. Gratitude is my only attitude and all that. And you could have been watching anything on YouTube. You could have been watching what happens when you ask Mike Tyson stupid questions.
Is it nerve-wracking for you to do something like this, or is it more nervous for you to box? How does it compare?
I don't know. It's more nerve-wracking for me to hear us talking to a rat piece of shit like you.
Come on, Mike.
No, because you're a piece of shit.
All right,
Really, that's
we're gonna wrap up this interview. Thank you for coming in.
Fuck you.
You done fucked up, you know that, don't you?
Or you could have been watching one guy that's gonna need a chiropractor for the rest of his life.
You got knocked the fuck out, man!
No, you done fucked up, don't you? No, don't you? No, you done fucked up.
Anyway, I'm glad you're back. So let's roll the credits and yeah, let's get to work. All right, hola mis amigos. What I want to show you now is my shortcut for finding good stocks, very stable stocks in a very quick and easy way. I understand that choosing individual stocks is very time consuming if you're going deep on the due diligence. And if you don't have time, like a lot of us don't, with full-time work and whatnot, you just want something to invest in. This is a nice, quick and easy way to do it. So, screen I'm in right now is on iShares.com. iShares are like a what do you call it? Like a fund manager, fund and assets manager. They have loads of ETFs along with other products, but it's the ETFs we're looking at today. This one in particular is the iShares Electric Vehicles and Driving Technology one. Its current share price is $7.50. And you can see in a 52-week period, the lowest it's been is $3.92, and the highest it's been is $8.10. So roughly at its kind of near its all-time high. And as you can see, it says here, like, why invest in e-car? Invest in a secular growth trend to take advantage of the irreversible shift towards electric vehicles. We all know that's coming. They want petrol and diesel cars off the road by, I can't remember what year, but we know all cars are going electric. So this is actually a good one to be in on. Seeks to capture not just the direct beneficiaries like auto manufacturers, but also the upstream effects by investing in suppliers to the companies changing the way we drive. Because in a portfolio like this, it won't just be the car manufacturers that we know, Tesla, NIO, blah, 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 but also there's many components to making up the car. You're going to need the chip makers, you're going to need the electric battery makers, all of those play a role. If we look at the key facts here, distribution frequency, it says none. Distributions are also known as dividends. So you can see this particular ETF doesn't pay a dividend. It is also eligible to be in the ISA side of whichever investment app you use, whether it's Trading 212 or Freetrade. So it's good to know that it fits in there. But what we want to look at within this ETF is the holdings. This is what we're really here for. I've showed you those other things because this is actually a good ETF. My mum owns this ETF. So hi, mum. Hope this is useful for you as well. They don't pay a dividend, like I just mentioned, and that's because you will make most of your money through the growth of the share price. So they don't need to actually pay you a dividend. You're going to buy it for one price, and in a few months it's going to be worth X amount more, and yearly more, and so it goes on. But anyway, we're here for the holdings. That's what we want to know. And as you can see from looking here, their biggest position in this ETF is Tesla, and it's 4.81% of the entire portfolio. Their shares that they've got has a market value of $29,581,817.60. I'd be grateful for just $817.60 right now. But anyway, so what I'd suggest you do is, once you know what sector you want to be involved in, find the ETF relevant to it and look for the top 3 holdings. And if any of them pick your fancy, then you take that particular name, put it into Yahoo Finance. Make sure you've got a Yahoo Finance account. That's where you want to start all your due diligence. And see what the bullish and the bearish news is. Also use tip ranks. My mum showed me about tip ranks again, so thanks again, Mum, for that. You can also get, what do they call it? Analysts rankings on there where they tell you what they think, whether it's going to go up, whether it's going to go down. But back to here, you want to go into the holdings of an ETF and see what their main positions are, because, you know, these guys, this is their bread and butter. They know what stocks to pick much more than we do. So I'm willing to take a chance on what they've picked. And in this one, they've got Tesla, Kia, and BYD Limited. I don't know what BYD is, to be honest. But if I was looking at these 3, already knew about them before, but obviously I'd pick Tesla. But in this portfolio, like I said, they've got other, what would you call them, subsectors within the sector. Like you'd have Samsung. I'm guessing that they're there for the chips. And also Infineon Technologies. I'm actually invested in Infineon separately. I think they're a fantastic company. They do so much futuristic products and things that are going to become normal very soon that I just want to be involved in it very early. And yeah, I suggest you go onto the website, look at what they do, because it's a stock I'd suggest. They're not doing much right now because of the chip shortage, so the price is just fluctuating around. I think it's around, you can pick it up for about 32. It's on the German market, whatever. So yeah, about 32 euros at the moment. It just fluctuates up and down. I guess the price ain't really going to move again until the chip shortage is sorted, but that's a very good one to be in. Right, for another example with the same thing, this time I will use Vanguard. They're another asset and fund manager, very big. And this particular ETF we're looking at is the FTSE All World High Dividend Yield ETF. If you was to get into this ETF, they do pay a dividend, 2.65% quarterly. And here you can see how much they pay per share. So, you know, if you held one share on the 18th of March, you would have got paid 38 cents. Now, I know straight away you think 38 cents, that's nothing. But let's look at that over the year. If we go to last March, so you would have got 38 cents, 40 cents, 48 cents, 33 cents. So you're talking about 120, 150, so about £1 in British pounds. But if you had 10 of them, then you've made a tenner off of what would have been about, how much does the share cost? £45, so about £450, and you would have made about £10 annually off dividends, if I've done my maths right. Now, we both know, had that money been sat in a bank, you would not have made £10 off of £450. You would have you'd have been lucky to get 10 pence. But anyway, back to the point. Within this ETF, if we go to portfolio data and go down to the holdings, we can see what stocks are in here. Their top three are Taiwan Semiconductor Manufacturing Co., JP Morgan and Chase, which is an American bank, very big out there. Johnson and Johnson, which we all know for their baby powder and earbuds and stuff, but they are actually a very big pharma, which I'm sure a lot of you know now, since they're coming out with a vaccine, which ain't too safe, but you know, it's not my business. Anyway, TSMC, one of the biggest chip manufacturers, 2.1% of the entire portfolio is that stock. So again, you know, you could chuck it straight into Google. Look on the year, you can see they've been going up until around here, 18th of February this year, when the chip shortage really kicked in, and it's just been going sideways since. Been fluctuating around here, the 113, 114 and 15 pound price range, and I doubt it will go back up again until the price is sorted. I mean, until the chip shortage is sorted. So it's actually a good time to get in if this is a stock you was looking at before anyway. Another example, again, I'll go into BlackRock, which is actually the largest fund and asset manager in the world. They are the biggest. And I've picked this one randomly just because the name sounded funny. BGF Asian Dragon Fund. So again, let's go to their holdings. Samsung Electronics, we all know Samsung through their phones and all the other electrical equipment. Oh, and again, TSMC, which makes up 6.56% of their ETF. Alibaba, which we all know is like Amazon and eBay on crack and steroids. They're just gonna grow much bigger in the future. Tencent Holdings, which my daughter is actually invested in, but she's got the music one, Tencent Music. And China Construction Bank Corp. To be honest, I don't know nothing about that, but I'd look into that, see how big they are, because they, you know, 3% of their portfolio. That is a lot. And yeah, so again, if these are ones you'd be interested in or you've heard of before, take them, throw them into Yahoo Finance, start your due diligence, and you can go from there. So that is bottom line. Find the sector you want to be involved in, even if you don't know the actual stock you want. See what the top 3 holdings are within the ETF and do your due diligence from there. What you will find is they won't just be hot stocks, you know, the stocks that everyone's into right now that in a time like this, during a correction, hold no weight. They've just plummeted, and now you've got no choice but to be a long-term investor in them or sell at a loss. Whereas these ones which I've shown you today, they would be stable, and during this correction they wouldn't have been affected nowhere near as bad as these other ones, which, you know, everyone's thrown their money into, and including myself with some of it, and you're just left back holding until this correction's over. So these ones could be the foundation stocks of your portfolio. So I hope that's been of use to you. It's a shortcut I use if I'm not sure what stocks I want, but I know the sector I want to be involved in. So yeah, I really hope that helps. Right, I hope you got some use out of that video. Little tips that you could apply to your investing styles if that suits. And if you did get any use out of the video, please like it, subscribe, share, all that good stuff. It's all appreciated at this early stage. And I'm going to leave a ton of links down below, including Trading 212, Freetrade, Crypto.com, Coinbase referrals. For using the referrals, we'll both get free shares or free crypto. So yeah, go ahead and use them if you haven't got accounts already. And yeah, thanks for your time. Truly appreciated. Gratitude is the only attitude and all that. Remain grateful through these horrible times. You know, people are going through some real tough times right now, whether it's financial or emotional. So, you know, just be a good person to yourself, most importantly, and others around you. So yeah, let's just end on that nice, grateful note. To the next one. Adios.